Welcome back to Investing Talk Podcast.
Today we're looking at First Majestic Silver.
And hold on to your hats because this is not just another sleepy mining stock we're talking about. We are looking at what can only be described as, well, a growth monster.
It really is.
I was looking at the production numbers for 2025 that just dropped, and I mean, record-breaking feels like an understatement.
Oh, absolutely. If you've been following the silver market, you know it's been heating up, but First Majestic is it's outpacing almost everyone.
And by how much? The stock is up what?
Somewhere between 200 and 250% in just the last 12 months.
That is just insane for a precious metals play. I mean, usually you're happy with a steady dividend yield or maybe a little capital appreciation, but this thing is trading like a high-octane tech stock.
And there's a very specific catalyst driving this, right? It isn't just hype or, meme stock energy.
No, not at all.
No, it's pure operational execution. The consolidated silver output for 2025 hit 15.4 million ounces. And to put that in perspective for everyone listening, that is an 84% increase year over year. They nearly doubled their silver output in 1 year.
That's massive. Okay, so we're going to unpack exactly how they did that, whether the financials justify the price, and if they can keep this momentum going. But as usual, before we start, subscribe, like, and comment to this video to support the show. It really helps us keep bringing you this analysis.
Okay, let's get right into the numbers, because the financial trajectory here is, frankly, it's startling.
Yeah, let's jump right in. I want to look at revenue first. We have the Q3 2025 numbers in front of us. They pulled in, what, 285.1 million?
Which is a staggering 95% increase year over year.
95%.
You almost never see top-line growth like that in the mining sector. It's usually a volume game where you're fighting to, inch up production by 5 or 10%. But nearly doubling revenue, that changes the whole story.
And looking at the full year for 2025, revenue was over 500 million. But what really caught my eye was the Q4 production surge.
Right.
They pumped out 4.2 million silver ounces in just the last quarter. That's up 77%. It feels like they're accelerating.
They are. And that acceleration is doing something really critical for their bottom line. For a long time, the knock on First Majestic, and to be fair, miners in general, was that they just burned cash.
Right. They dig great holes, but don't always fill the bank accounts.
Exactly. But look at the earnings now.
Yeah, we're seeing that profitability inflection. They swung from losses to positive earnings, net earnings of $43 million, or an EPS of 6 cents.
Right. It's one thing to dig rocks out of the ground. It's another to make actual money doing it. This is operating leverage in action, and the market is looking forward. The forward guidance is what has people really excited.
Okay, what are the analysts saying for 2026?
They're forecasting revenue to hit $1.3 billion.
Oh, wait. Let's pause on that. $500 million in 2025. To $1.3 billion in 2026.
A 30% jump on top of the massive jump they just had.
That's hyperbolic growth. I mean, it creates a compelling narrative, but I know you know what I'm thinking.
The balance sheet. I can hear the skepticism gears turning.
I am. I'm a skeptic here. So let's look under the hood. The financial health actually looks, well, surprisingly robust. The current ratio is strong at 3.38. Debt to equity is super low, 0.07. They aren't over-leveraged.
Which is rare for a company growing this fast. Usually you see them take on a mountain of debt to finance that kind of expansion.
But here's the thing that bugs me. They just did a capital raise, $350 million through convertible notes.
Right.
If they're so profitable and cash flow is good and they have no debt, why are they doing this? Is this a red flag? Are they secretly cash poor?
It's a fair question, but if you look at how they're deploying it, it looks less like a desperate cash grab and more like a war chest.
Okay.
They're earmarking this for heavy capex, expanding the Santa Elena mine, integrating new assets.
Right.
In the mining game, you have to spend money to find money.
So you see it as fueling the next leg of growth, not plugging holes in the ship.
Absolutely. And here's the proof of their confidence. The dividend. You don't increase your dividend if you're worried about cash flow. They bumped it to roughly 2% of net revenues. They're literally paying investors to stick around.
That does signal confidence. Okay, let's talk about the moat. Why First Majestic? Why not a diversified miner like Barrick or Newmont?
Well, they might be safer, but they don't offer the purity. First Majestic is a pure play. For most big miners, silver is just a byproduct.
The icing on the cake.
Exactly. For First Majestic, silver is the cake. Over 50% of their revenue comes directly from silver.
So if you're really bullish on silver prices specifically, This is the highest leverage trade you could make.
Precisely. It's what we call high torque. And the acquisition of the Los Gatos mine changed everything. That single asset contributed 1.5 million ounces in Q4 alone.
And they're trimming the fat too, right? I
Wow.
saw they sold the Del Toro mine.
Correct. For up to 60 million, they're getting rid of higher cost, lower grade assets to focus on the cash cows. It's smart.
All right, so the fundamentals are screaming growth. The strategy seems sound. But let's pivot to the charts, because sometimes the stock price tells a very different story.
In this case, I think the chart is confirming the story.
Loud and clear. The stock just hit a 52-week high. I mean, we saw intraday highs hitting around $23. We are firmly in new high territory.
It's a classic breakout. When you clear those old resistance levels, it just brings in a whole new wave of buyers.
But it hasn't been a straight line up, has it?
No, and that's the volatility you have to stomach with silver. Just on January 16th, we saw a sharp 4% drop.
Shook a few people out, but then it recovered almost immediately.
That recovery is key. It shows buyers are stepping in on the dip. But structurally, look at the moving averages. This is textbook.
Yeah, we have a clear golden cross. The 50-day is well above the 200-day. For the technical traders, that's just a big green light.
It implies the long-term trend is firmly bullish. But what about momentum? Is it getting a little hot?
That's a good question. The RSI, the Relative Strength Index, is around 66. So it's strong, but technically not overbought yet, which usually starts around 70. However,
Here comes the however.
the stock RSI is in the low 80s. That does suggest we might be due for a short-term pullback. It feels like a rubber band that's been stretched pretty tight.
That's valid. But look at the institutional flow. I'm seeing unusually high options activity that suggests the big money isn't too worried.
What kind of activity?
Call volume. It's running about 40% above average, something like 91,000 calls.
And buying a call option is a bet that the price is going up.
Exactly. So when you see that kind of volume spike, it suggests that institutional investors are positioning for further upside. They're betting on a continuation.
So the chart looks strong, maybe a little frothy short term. Let's pivot to sentiment. What is the smart money saying beyond just options?
Well, the sentiment analysis is pretty fascinating. We track a weighted score based on news and analyst reports.
Yeah.
Right now, it's sitting at a bullish 0.42.
Which means?
It means about 60% of recent coverage is positive. The whole narrative has flipped from, can they turn it around, to how high can this thing go?
Yeah, and Wall Street seems to be chasing the price, which is always funny to watch.
It is. National Bank Financial just upgraded them to a strong buy. Consensus price targets are moving up, sitting around $17 to $18, but some are seeing a path to 22 plus.
It feels like the analysts are just playing catch-up to the production numbers we talked about.
They usually are. They're reactive, not proactive.
Now, let's talk ownership. Who actually owns this thing?
Institutional ownership is healthy, around 27%.
Yeah.
You have heavy hitters like Vinac and Murray increasing their stakes. These are long-term holders.
And you knew there was a but coming. I have to flag something on the insider side. We are seeing substantial insider selling.
It is noticeable, yeah.
It's more than noticeable. When the stock is up 200% and the executives are hitting the sell button, you have to ask, do they think this is the top?
It's a classic warning sign. You should never ignore it. However, context matters. After a run like that, some profit-taking is natural. If you see the CEO dumping their entire position, yeah, run for the hills. We aren't seeing that, but it is a yellow flag. It tells me the insiders think the stock is, fully valued right now.
Okay, noted. Yellow flag. And before we get to the risks, there's some chatter in the news feeds, unconfirmed, but rumors about M&A activity.
Merger chatter. It's speculative, but it wouldn't be shocking.
Yeah.
Let's treat that as noise for now, though.
Agreed. Okay. Let's look at the flip side. We've been pretty positive, but what breaks this thesis? Let's talk about the bear case.
The first cold shower here has to be valuation.
Yeah, I'm looking at the price-to-sales ratio. It's 10.9x.
Which is high.
High. It's astronomical for a miner. The industry average is in the low single digits. You're paying nearly $11 for every $1 of revenue. That's a sauce company valuation.
That's the risk of a growth multiple.
Yeah.
You are priced for perfection. If they miss a production target, the multiple compression could be brutal.
And some models, like Goo Focus Value, suggest it could be significantly overvalued, with downside risk all the way to $9.
And then there's the sword of Damocles hanging over every miner.
Commodity dependency.
Exactly. First, Majestic doesn't set the price of silver. The global market does. If silver drops, those margins, poof. They vanish.
And it's even trickier for them in 2026. Their own guidance assumes lower metal grades next year.
That's a crucial detail. It means the rock they're digging up has slightly less silver in it per ton.
So to maintain their numbers, they need even higher throughput. They have to process more rock just to stand still.
Yes, they're on a treadmill that is speeding up, and that leads directly to execution risk.
They're integrating Los Gatos, expanding Santa Elena. Any hiccup, a strike, a failure.
And the stock will get punished because, again, it's trading at 10.9 times sales. There's zero room for error.
That's the burden of being a growth monster.
It is.
All right, we've looked at the massive production, the sketchy valuation, the breakout, the insider selling. Let's reach a verdict. Putting it all together, what's your score?
I'm giving First Majestic a bullish score of 8.5 out of 10.
That's very high, given the valuation concerns we just talked about. Walk me through that final thesis.
Look, the valuation is a concern, I grant you that.
Yeah.
But momentum and fundamentals are overpowering it right now. First Majestic is a high-torque engine. If you want silver exposure, this is the Ferrari. It's fast, it's loud, and yes, it's expensive.
But the engine is purring.
It's roaring. Triple-digit revenue growth potential doesn't happen in this sector. They have a fortress balance sheet, and Los Gatos has fundamentally changed the company's profile.
So what's the strategy then? Do you buy at the high?
No. I think you listen to your own technical analysis. The stock RSI is hot. You buy on pullbacks. You aim for an entry in the mid-teens if you get the chance.
So patience on the entry.
Exactly. And then you hold. This is a 12 to 24-month play to ride the silver supercycle. If that thesis holds, AG is going to lead the pack.
That's the verdict. Subscribe, like, and comment to catch the next one. We'll see you next time.